MicroStrategy has 600,000 Bitcoin.
Yep.
If the U.S. government wants to get to 1 million Bitcoin, or Qatar, or UAE, or I don't know, UK, okay, and they say, I'm going to buy 1 million Bitcoin in the open market, the UK buying 1 million Bitcoin, or the US buying, or China, Bitcoin's going to $1 million. The US government might say, MicroStrategy has 600,000 of this already.
Yeah.
I'll pay 200% premium, and it was cheaper than paying $1 million per Bitcoin. So that's called a sovereign put. Crypto is a narrative-driven space, okay? Because it really runs on trust.
Right.
And so we know Bitcoin, the thesis is trust and, digital gold. But I think the story now is programmable money.
If a major government moves to buy 1 million Bitcoin on the open market, the price will explode to $1 million almost instantly. And with MicroStrategy already holding 600,000 BTC, that moment may come sooner than most people think. That's the latest message from Tom Lee, co-founder and head of research at Fundstrat. There's a growing possibility of sovereign demand becoming Bitcoin's next major catalyst. Governments aren't blind to Bitcoin's trajectory, especially its most recent successes. If one decides to secure a strategic reserve, the supply shock would be historic. At today's liquidity, even a hint of large-scale sovereign buying would ignite a parabolic move. Make sure to stick around until the end of the video, as Tom Lee shares his latest outlook on Bitcoin, and why the next explosive run may just be around the corner.
Do you think retail participation is net good?
Yes.
Why?
I'll give you a perfect example. MicroStrategy. They've orange-pilled people. Like, people own MicroStrategy not because it's a security business, but it's because Saylor is getting me more Bitcoin per share. And so maybe what you're seeing is people are discovering that you not only want programmable money, but you want to be running on the biggest network that does programmable money. And Ethereum is 300 billion. So it is the largest smart contract blockchain. Crypto is a narrative-driven space, okay? Because it really runs on trust.
Right.
And so we know Bitcoin, the thesis is trust and, digital gold. But I think the story now is programmable money. Stablecoins are the ChatGPT of crypto because it's really crossed over into the mainstream. But it's really evidence that Wall Street is trying to equitize tokens,
Correct.
But then the crypto world is tokenizing equities because they tokenized $1, right? And then now you're seeing, JP Morgan wants their own stablecoin, Amazon, Walmart, Goldman. Well, stablecoins are a great business model and they work really well for consumers and merchants, but they all have to operate on a blockchain.
Correct.
And the majority of stablecoin transactions take place on Ethereum. Because someone's going to say, if I want to bet on Ethereum, why don't I just buy the ETF?
Right.
Or why don't I just buy it on chain and
custody or something?
Custody,
right?
yeah. But see, a treasury company has 5 real important pieces of optionality. Okay. So if you buy an ETF or if you buy Ethereum on chain, your units held of Ethereum is going to be constant. Now, a second thing that got people super bared up, our institutions, was, Tom, the Fed's not coming to the rescue. They said, the only reason markets rally is the Fed cuts rates and unleashes money. And actually, our argument was, that's actually an illusion. So our belief was that you'd still get V-shaped even if the Fed didn't cut. But a lot of people were saying, look, the Fed said they're not going to cut.
Right.
So we're going to actually keep falling.
Right.
But instead we had the V-shaped recovery.
Why were you able to see that it is an illusion to think to depend on the Fed to bail you out?
Well, I think it is an illusion because when the Fed is adding liquidity, it's just giving the money to the banks.
Right.
So if the banks aren't lending, that was happening after 2008. They gave the money, the banks just built up reserves.
Right.
It wasn't sloshing around.
Correct.
So the more important money is actually retail. And that's there's 4 cohorts, 4 or 5 real distinct cohorts in the market today. So we know there's institutional.
Right.
There's non-US.
Yep.
Right. And
Foreign.
everyone's like, we're leaving the US. There is high net worth.
Family offices.
Yeah, exactly. They stay bearish because they follow what hedge funds do.
Right.
Then there's corporates who do buybacks.
Correct.
And then there's retail. retail was the only one buying the market at the April lows.
40 billion in March and April.
Yeah. I'm very proud of the retail investor.
Well, part of the reason they did is because they listened to you. So I guess the question here is, why do you think retail was able to see through? I mean, I know institutions have a fiduciary responsibility to sell, but why didn't they buy as heavy as retail?
I think it's because retail investors see this as a stock market.
Retail is stepping up where institutions hesitate. According to Tom Lee, during the April lows, when the hedge funds stayed bearish and corporate buybacks paused, it was actually the retail investors who were pouring billions into the market. They saw opportunity where larger investors saw risk. Lee says he's proud of retail, not just for showing up, but for getting it right. Crypto runs on trust and momentum. The Fed might hold back liquidity, but retail moves fast. That's why, in Lee's view, the rise in retail investors in crypto is one of the clearest signs that another major bull run is already on the way.
A retail investor sees it as stocks,
Right.
but the higher up you go, they're more macro. They're like, oh, Trump's going to just drive us off a cliff. The Fed's going to kill us. And so these actually create biases.
Right.
And
Right.
then when the actual economy doesn't, or the stock market doesn't react to what their framework is, then they're like, oh, the market's insane. This is the dumbest rally. Only
Correct.
retail's buying it. So then they're caught off sides because they're now sitting on cash, institutions, on a complete full V-shaped recovery. And that's why it's the most hated V-shaped recovery.
Yeah, I mean, getting 4% in a money market while Meta's going up by 40%. How are these conversations? Because I imagine one of the reasons I was very bullish in 2023 is because you kept saying your institutional clients didn't believe in what was happening. And that was the wall of worry that you kept using to justify, no, we probably have more momentum left. When you talk with these people, do they just want to curse you out, but also at the same time, they want to say, well, thanks for letting us know it's time to buy?
Yeah. Well, compared to 2023 and 2020, the institutional universe is even more bearish.
Wow.
They're convinced we're late cycle. One thing to keep in mind is if you look at political affiliation in the equity market, 65% of fund managers voted for Biden.
I did not know that.
Yeah. So, but if you look at the bond market, it flips. The
Right.
bond market historically votes Republican.
Correct.
So most people think Trump is a madman, right? Because they didn't vote for him.
Are
So-
you saying TDS is one of the reasons why people did not buy the dip?
Yeah, we write about it a lot in our research, actually. So it's a partisan stock market. And actually, people... So these have been uncomfortable conversations that we've had all year
I would
because...
imagine. No.
Yeah, because they're like, Tom, we can't... You're telling us not to sell. Because our advice was, don't sell. Like, even though I didn't know where the bottom was, I did know it was V-shaped.
Right.
But they're like, Tom, we can't do that, And then I was like, well, I showed the stat. Whenever the VIX is above 60, and then it closes below 30, 100% of the time, it's been the bottom.
Correct.
And they're like, well, it's different because the Fed's not going to save you. So everyone found a reason to actually argue for why a recession was starting. And as you know, economists went full-on recession call.
That's correct.
So if you're a equity guy, how can you go stocks are going to do V-shaped when the economist of the firm just said there's a recession? So I
Right.
think they got caught, and we're not having happy conversations with people.
Do you still think this is so you've articulated now that this is the beginning of a new bull market, and I imagine those institutional clients lose their mind when you say that. In a sort of nutshell, why is that the case?
Well, it's fact based because we had a drawdown of more than 20%, and then we made a new high. So like the weird math that like let's say a commodity trading advisor, a CTA,
right?
has is that when you have a drawdown and then you make a new high, that date is the start of a bull market.
In other news, following the momentum created by the Genius Act, digital asset platform Bullish is making a move to go public in the United States. The Cayman Islands-based company has filed a registration statement with the U.S. Securities and Exchange Commission for a proposed initial public offering. Bullish plans to trade on the New York Stock Exchange under the ticker symbol BLSH. This filing puts Bullish in the same lane as other crypto firms like Gemini and Grayscale, both of which have recently filed with the SEC. This clearly shows how more crypto firms are starting to lean into public markets and work within US regulations to grow their presence. Bullish has had strong backing from the start. Billionaire investor Peter Thiel was one of the early supporters through his firms, Founders Fund and Thiel Capital. The company operates a regulated digital asset exchange with licenses in Germany, Hong Kong, and Gibraltar. Its platform combines automated trading with a traditional order book to serve institutional investors who want speed and compliance in one place. With Washington now signaling stronger support for digital assets through legislation, Bullish's IPO may be the first of many. This could mark a new phase where crypto firms go mainstream, secure investor trust, and help transform the financial system from within. Do you think this is good news? Let me know in the comments. Anyway, guys, before we go, if you want to stay most up to date on the crypto and Bitcoin world, subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 90,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it gave you some value. I'll see you all at the next one, and as always, all the best.